All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Tuesday, everybody. Today is November 5th, 2024. It's election day. We can all put this ridiculous exercise behind us soon. More on that at the end of the show. But for now, let's talk about the business news. And as I'm going through the companies that are reporting earnings and the economic data today, I'm seeing a consistent theme here, and that is restaurants, guys. And we've talked about the bifurcation of the economy. We've talked about how, luxury brands are doing okay, with the exception of China. Sales way down in China, pretty much across the board. But while all the headlines in the mainstream press are saying, oh, retail spending is up and, the economy is looking good, consumer behavior looks good, then we get earnings today from Yum Brands. Yum Brands is the owner of KFC, Pizza Hut, Taco Bell. And we also get earnings from Restaurant Brands International. They're the owner of Burger King, Firehouse Subs, Popeyes, Tim Hortons. All right, all of these, there's a lot of fast food chains in there. There's also some fast casual stuff, some coffee houses, that kind of stuff. But we're seeing a consistent theme with almost all of those names that were just spouted off, with very few exceptions. We are seeing big time declines in same-store sales. All right. And in restaurants, that is a death sentence in that business. And let's also keep in mind, we still are in a period of elevated inflation. Over the last year, inflation has averaged something like about 3%, low or high twos, maybe 2.7, 2.8% has been the average CPI inflation rate. And food away from home has been consistently higher than the inflation rate that we've seen on average. And so, if we're seeing same-store sales decline, same-store sales are not inflation adjusted, which means the stuff that they're selling is more expensive, and yet the total sales are in decline, which means they're selling a lot less stuff. Right? And you don't need to be an economist. You don't need to study finance to figure out what's going on here. People just can't afford to eat out. Right. And all this talk about how good the economy is and what's the matter with you plebs, how come you don't realize how good you have it? You can see it in the numbers there, regardless of the fact that Americans are putting themselves into debt to maintain a standard of living that they can no longer afford. And as they do that, it makes consumer data look healthy. It makes retail sales look good. You can see it in their discretionary items like fast food. The average person just can't afford to eat at freaking KFC anymore. So who had KFC becomes a luxury dinner on their 2020s bingo card. That is what's going on in this economy. And you know who else can see it? Walmart can see it. Shout out to my moderator, Mish. He found a really good data point today. There's a firm out there that tracks the import data of how much total tonnage of Christmas-related merchandise Walmart has been importing. Now, it's not a perfect representation because it counts it by weight. So maybe some of the stuff is getting lighter, and it also doesn't account for things like inflation, total retail sales, all that stuff. But it is pretty clear the numbers are striking. Significantly lower total imports of Christmas related items. We're talking Christmas trees, we're talking toys, we're talking decorations, lights across the board. Much less weight than we bought in last year, and way less weight than we bought in 2022. And so you can cherry pick the data and you could argue, well, maybe this makes it a little bit less and this makes it a little bit less. But the numbers, the decline is so staggering that it is pretty clear Walmart is expecting a weak Christmas season this year. And then perfect illustration of the bifurcated economy, we got Palantir earnings yesterday. And by the way, who knows what Palantir does? Can anybody tell me in the comments, what the hell does that company even do? That a-hole carp with his hair that looks like he stuck his finger in a wall socket. What does that guy do? All we know is they do AI for the government. Okay, what's the worst thing that could happen? Please don't answer that. But Palantir earnings, amazing. Up 30% year over year in revenue, and their net income has doubled from a year ago. So while you can't afford to eat at Burger King and you can't afford to eat at Taco Smell or at Firehouse Subs or Tim Hortons, the guys who do artificial intelligence, programming drones to kill people from high altitudes without human interaction, they're doing great. They're doing awesome. And by the way, that's just like a random spouting off. I don't even know if Palantir does that. I don't know what the hell that company does. I don't think anybody really knows what that company does. Does Palantir even know what Palantir does? I don't know. But they're making a ton of money doing it. And, well, the world is marching off into World War III. Nobody can afford to eat out, and Palantir's doing great. So, hey, we've all got that to look forward to. Let's see. What else we got? We got Boeing is in the news again. Boeing's workers have voted to approve the new offer that included a 38% raise as well as a signing bonus and other retirement goodies. So the Boeing strike is over. It lasted, I think, exactly 2 months or a little bit more than 2 months. So that one is over. It should give us a temporary bump in the jobs numbers next month. Now that strike is over, that's about 40,000 people going back to work. Ferrari sales came out today, way down. Luxury vehicle sales are way down. Where? You guessed it, in China. Another story about a struggling auto company and another story about the struggling Chinese consumers, two very common themes along with declining restaurant sales that we've seen over the last couple of weeks. And last but not least, we got an article this morning about first-time homebuyers. And this one was pretty interesting. First-time homebuyers now make up the lowest share of total home sales in 43 years. And if you're wondering why 43 years, don't worry, because that's just only as long as we've been counting. So as far as we know, first-time homebuyers now make up the lowest percentage of total home sales ever, because for as long as we've been measuring the data, which is pretty much as long as I've been alive, first-time homebuyers have made up a bigger share of total home sales. So again, the bifurcated economy. While Greg Ip over at the Wall Street Journal is saying, hey, it's the best economy ever, why don't you plebs understand it? And all these hipster analysts are like, the vibe session, the problem is your bad vibes. Well, entire generations can't afford homes and they can't afford to eat out. Maybe the problem isn't just perception. Maybe the problem isn't vibes. Maybe the problem is these analysts are full of shit and they're gaslighting people. Just maybe. Hey, I throw them out there. You guys do what you want with them. Anyways, we got a lot to talk about today. Let's shrink my big melon of a head and go through some of these earnings and see what the markets are doing. Don't forget that like button for the YouTube algorithm. And if you're new here, hit the subscribe button because we do this every day. So come and have your coffee with the Melonheads. The S&P 500 is up a modest 10 points this morning, 0.18% higher. We got the Dow is up by 45 points or 0.11% higher this morning. And the NASDAQ is up 41.8 points. That is about 0.2% higher. So the NASDAQ leading the way higher. Stocks up pretty much across the board, albeit modestly this morning. I suspect by tomorrow we're probably going to have a little bit more volatility. But for now, things are a little muted. We've got a weaker dollar once again this morning at 103.74. That's down another 14 basis points. That should put some upward pressure on asset prices this morning. And we have got the bond market is pretty much frozen in place. Not a lot going on in the bond market here. We got the 30-year Treasury at an even 4.5% here. That is up a fraction of 1 point. The 10-year is at 4.321, back above 4.3%. That is 1 basis point higher this morning. The 2-year, 4.187, also up by 1 point. And the 1 month is at 4.626. That is down about 1.5 points. So not much movement going on in the yield curve today. Looking over at commodities, I'm seeing a lot of green on the commodities board, though. We've got spot gold is up a modest $8.30, about a third of 1% higher, $2,745 for spot gold. My favorite of the shiny, spot silver at $32.79, $32.80. There we go, up about 35 cents this morning, 1% higher for silver. I like the shiny. Copper, meanwhile, is up about 1.1%. We've got platinum is up 1.6%. Palladium is up 1.75%. And even WTI is up a little bit higher this morning here, another 60 cents or 0.85% higher at $72.08 for December WTI crude. Again, we saw a nice jump in oil yesterday on the backs of that release from OPEC Plus that they were going to delay their production increase. And we got some more OPEC/Saudi news today. This one in Bloomberg. We're not going to spend too much time on this, but this was an interesting story. Saudi Aramco faces a $31 billion dividend dilemma as the debt jumps. Aramco's ability to borrow can maintain payouts amid the oil slide. It flipped into a net debt position for the first time in 2 years. So what's interesting here, Saudi Aramco, the biggest oil company in the world, it's still mostly owned by the Saudi royal family, the Saudi government. But at this point, the company is not making enough money to cover its dividend. So they have a question here. Oil prices are low. Do we borrow money in order to maintain this dividend, or do we lower our dividend payouts? Now, here's the thing. The majority owner of Saudi Aramco is still the Saudi government. And the Saudi government gets a lot of their money from the dividends paid out by Saudi Aramco. So if Saudi Aramco lowers their dividend, then the Saudi government would have to borrow more money to maintain things like their silly infrastructure spending projects on their big giant line city Neom. That's just one big giant boondoggle in the desert. So the question here with what Saudi Aramco is pondering is, who's going to go into debt? Is it going to be the Saudi government, or is it going to be Saudi Aramco? One of these two will have to borrow because oil prices are down. Now, my gut tells me it's probably going to be Saudi Aramco that goes into debt, because at least then the Saudi government can split the debt burden with Saudi Aramco's global shareholder base. But this kind of illustrates the problem here. We've been talking about, will the Saudis flood the market with oil again? Will we get those lower oil prices? Will the OPEC plus cartel decide, hey, American producers are just gaining too much market share, it's time to open the tap, flood the market with oil, and put those U.S. producers out of business again like we did in 2015? But if they do that, oil prices crash and Saudi Arabia goes into debt. So we're already starting to see the early innings of this question about who's going to cover the bill if there's a price war in the oil market. This is one to keep an eye on. My gut tells me Saudi Aramco will borrow in order to maintain their dividend. But this is belying the underlying question of, are the Saudis going to declare war on Western oil producers? Also going on, we got Bitcoin is a little bit higher this morning here. Basically, though, pretty much back to where it was yesterday morning. We're up about $1,000 on Coinbase at $68,875. I guess that's up about $800 from yesterday. So it's doing pretty good here. Still within this band it's been in the last week or two. We broke out of this bull flag pattern. Looks like we retested that line again, possibly heading higher here. Again, guys, expect volatility across the board tomorrow. Hopefully this time tomorrow we have a winner at least. Now let's talk about the main story, the restaurants that are going on. We're going to go a little fast through this because these are pretty long articles, and to get to everything, I'm not going to read the whole thing. But the first one that reported was Yum Brands. All right, Yum Brands earnings miss estimates as KFC and Pizza Hut report same-store sales declines. Yum Brands on Tuesday reported quarterly earnings and revenue that missed Wall Street expectations as same-store sales at KFC and Pizza Hut slid more than expected. Yum reported third quarter net income of $382 million, down from $416 million a year earlier. So big drop in profitability. Net sales rose 1.83%. Now, let's talk about some of these data points here. Worldwide, same-store sales fell 2% in the quarter, dragged down by weaker performance at KFC and Pizza Hut, which saw same-store sales declines of 4%. So not just a U.S. problem. This is a worldwide problem of same-store sales. That being said, let's look at some of these data points. KFC's U.S. same-store sales slid 5% this quarter, so a bigger drop for the U.S. This is the second largest market for KFC, second only to China. Pizza Hut saw a steeper decline in international markets, 6%. Same-store sales shrank internationally for Pizza Hut, while U.S. same-store sales fell just 1%. Also, keep in mind, guys, again, inflation adjusted or not inflation adjusted. So if same-store sales shrink 6% and inflation is another 3%, then really about 9% fewer things have been sold at the store because you can just add the inflation rate to that negative number. Taco Bell, meanwhile, is the one exception here. Taco Smell is the one gem in Yum's portfolio reporting same-store sales growth of 4%, which is just modestly above the inflation rate. So we actually are seeing more tacos get sold. Executives have previously said that the chain has a strong perception of value from consumers, helping its sales even during an industry-wide slowdown. So Pizza Hut, way down. KFC, way down. Taco Bell, up just a little bit. Most of the stores at Yum Brands not doing so well. That stock, though, a little bit of negativity was built into it. I guess people were expecting this here because it's up about 1% pre-market, trading at $134.20. We also got Restaurant Brands International. That's the parent company of Burger King. And, well, the Burger King parent falls short of third quarter expectations, much like Yum Brands did. Again, the market was largely expecting this. Restaurant Brands International on Tuesday reported quarterly earnings and revenue that missed analysts' expectations as domestic same-store sales growth for all four of its chains fell short of Wall Street expectations. Restaurant Brands reported third quarter net income attributable to common shareholders of $252 million or 79 cents a share. Net sales climbed 24.7% to $2.29 billion, largely thanks to the company's acquisition of its largest U.S. Burger King franchisee. So that's not really a comparable number here. Now, worldwide same-store sales grew just 0.3% in the quarter. So we actually have a little bit of growth for Restaurant Brands here, but way below the rate of inflation. So again, declining real sales here. Burger King, Firehouse Subs, and Popeyes all reported same-store sales declines in their home markets. Home markets meaning the United States and Canada. Burger King same-store sales fell 0.7%. Analysts had expected that to be flat, so that's disappointing there. Let's see. Popeyes reported same-store sales declines of 4%, well off the expected 0.2% gain. And Firehouse Subs saw its same-store sales shrink 4.8% in the quarter, compared with a decline of 0.4%. Now, the one silver lining here, like Taco Bell was for Yum Brands, we've got Tim Hortons. Their domestic same-store sales grew 2.3% in Canada. So, again, 3 out of 4 brands in the negative here, guys. Restaurants just not doing well. People can't afford to eat out. And Restaurant Brands International, their stock is not doing so hot this morning, down 2.2% ahead of the opening bell at $68.50. So people can't afford to eat out. Maybe they're just saving money for Christmas, right? Maybe that's what's going on. Nope. Walmart, other U.S. retailers import fewer goods ahead of a tepid holiday season. Now, normally I wouldn't put too much stock in this article, but the numbers, the decline here is massive. All right. Santa Claus is not delivering as many Christmas trees, toys, and decorations to the United States this year as in recent years, import data shows, with retailers, including Walmart, bringing in less holiday product ahead of what is expected to be a so-so holiday season. Walmart, the world's biggest retailer, has slashed Christmas imports deeply, shipping at least 340,000 kilos of product described as Christmas goods in the U.S. in the 12 months ending September 30th. All right, so 340,000, that is the number for this year. That's kilos of Christmas imports, 340,000 key. All right, now let's compare that to what we saw last year. The retailer shipped almost 3 times more product, 980,000 kilos in the prior 12 months through September 30th of 2023. So right there, about a third as much Christmas gear has been imported versus a year ago. All right. So again, maybe this isn't an apples to apples comparison, guys, because we're talking about the weight of imports. Christmas sales are measured typically in dollars, where you adjust for inflation. Also, maybe the stuff got lighter, right? Plastic is lighter than metal, or maybe they're importing cheap, lighter stuff, and so that looks like it. Or maybe they're just buying more domestically produced Christmas gear. Possible, but 1/3 of the imports, it doesn't explain a drop that big. And the numbers get even worse if we look at 2022. In the same 12 months of 2022, Walmart imported 1.9 million kilos of Christmas goods for 2022. So, guys, let's look at the trend here, okay? 2022, 1.9 million. 2023, 980,000. 2024, 340,000. So 340,000 over 1.9 million. Walmart has only imported about 18% as much Christmas stuff as they did 2 years ago. All right. So when you're seeing all these articles about, hey, you guys, how come you don't realize how good you have it? How come everybody doesn't understand it's the best economy ever? I would answer that with, why is Walmart importing less than 1/5 as much Christmas stuff as they used to? If everybody is doing so well, Why isn't Walmart buying Christmas stuff? It's the best economy ever, right? Not so much. Now, Walmart investor Sizemore Capital said Walmart routinely scrutinizes data on shopper spending patterns, including credit card data. They have done the research on their consumer, and what they've concluded is that holiday season is not going to be as strong. That's according to Charles Sizemore, chief investment officer at the firm. Although the holiday product import data does not count electronics, clothing, or other general merchandise, what it shows is pretty obvious. If Walmart is ordering less, they are expecting sales to be tepid. Retailers are predicting a smaller sales increase this holiday than we saw last year, said Gerald Storch, retail consultant at former Target vice chairman and ex-CEO of Hudson's Bay. Consumers are stretched with less money left for discretionary purchases. While total U.S. consumer spending is up, some commentators keep confusing total consumer spending, including necessities like housing and healthcare, with discretionary spending. And man, that last sentence, that last quote there, who is this again? This is the Gerald Storch. Gerald Storch gets it here, or Stork. I don't know if I'm mispronouncing his name. Jerry. Can I call you Jerry? Jerry, you're right on the money here. Some commentators keep confusing total consumer spending, which includes food and shelter getting more expensive, with discretionary spending, which is things like Christmas decorations, all right? So if the economy is really so good, how come all the money we have is going to just keep a roof over our head and keeping our kids fed? And sorry, we can't afford a Christmas tree this year. Apparently that's the story here, and they're reporting this as such a strong economy. So, again, it's not the perfect measure of economic health, the total weight of Christmas imports at Walmart, but the decline from 1.9 million down to 340,000 kilos over a span of 2 years, that beautifully illustrates what inflation has done to the discretionary spending of the average person. But it's all right, guys, because while you can't afford Christmas lights this year, Palantir shares surge on rosy revenue outlook. Your tax dollars at work. Alex Karp thanks you in advance. There he is, a smug prick that he is. Palantir shares jumped 13% in extended trading on Monday after the data analytics software maker reported robust third quarter results and revenue guidance. We absolutely eviscerated this quarter, driven by unrelenting AI demand that won't slow down, Palantir co-founder and CEO Alex Karp wrote in the company's earnings release. Palantir's revenue grew 30% year over year. Net income of $143.5 million was up from $71.5 million in the quarter a year ago, so a doubling of net income. Karp called out the adoption of artificial intelligence in the company's U.S. government customer base. So what is the U.S. government doing in AI that Palantir's revenue has doubled, or Palantir's income has doubled in a year? What are they using the AI for? Hey, our government is deeply in debt. I don't know what they're doing with the data, but they're spending our money on it, and I'm sure it's going to be really good for us. Whatever. When a guy like this gets a huge government contract worth billions of dollars to do artificial intelligence, I'm sure it's really good for us, right? Do we need a tinfoil hat? Do I need to put this thing on? I don't know. The growth of our business is accelerating, and our financial performance is exceeding expectations as we meet an unwavering demand for the most advanced artificial intelligence technologies from our U.S. government and commercial customers, Karp said in a letter to shareholders. I would also add, guys, there was one kind of weird quote here. They're saying international commercial revenue was down 7% from the second quarter because of challenges in Europe and because of less money coming from a government-sponsored customer in the Middle East. That's according to David Glazer, Palantir's finance chief, on the conference call. It's interesting that they'll say a government-sponsored customer in the Middle East. They don't want to use the word Israel. I guess for whatever reason, they're afraid of saying, oh, yeah, we also do AI and security work for the Israeli government, but we don't want protesters outside our headquarters. So we're going to hide that by calling it a government-sponsored customer in the Middle East. Well, okay, great. Palantir stock ripping higher this morning, up 15.8%, $47.99. That is up about $6.60. So you can't afford to eat out. You can't afford a Christmas tree, but your government thanks you in advance because Palantir's earnings are doing great with whatever they're doing for AI for the government. Meanwhile, the Boeing strike appears to be over. Boeing ends crippling strike as workers accept latest offer. We won't spend too much time on this, guys, because we have covered Boeing so much this year. 59% of union members voted in favor of the agreement. So some 40,000, I think it was 38,000 was the exact number, airline workers or airplane construction workers are going back to work. Boeing stock is enjoying it this morning, up 1.68%, $157.68. That's up by about $2.61 this morning. Another tell for the health of the greatest economy ever. Ferrari shipments fall on muted demand for luxury cars. Even Ferrari, tough time in the auto industry, guys. Ferrari said shipments of its luxury cars declined in the third quarter as the Italian manufacturer got caught up in the downturn hitting the rest of the industry. The drop was led by the Greater China region, where the manufacturer's deliveries slumped 29% following similar declines there seen by rival luxury car makers. So the China consumer, the auto market being in shambles, two stories that we've covered a lot. Ferrari suffering from that here as well. This is priced in euros, 412 euros per share. That's down about 25.5 euros today, about 5.8% lower for Ferrari shares, being driven largely by the Chinese consumer. And just to close this one out, guys, I want to talk about this one. This story really struck a nerve with me this morning in Market Watch. First-time homebuyers' share of home sales hits 43-year low. Real Estate Group says the housing market appears bifurcated. Really? You think it appears bifurcated? It appears bifurcated between repeat home buyers and first-time home buyers. It has never been this challenging to be a first-time home buyer. And I know I got some of you millennials and Gen Zers are following this channel. I get emails about this all the time. When should I buy a house? Do I just FOMO in? Prices won't come down. They're never going to come down. I can't afford a home. I never know what to tell these people. But you can see the frustration here in this data. Over the last year, as home prices inched toward new highs and the 30-year mortgage rate stayed firmly above 7%, first-time home buyers have been relegated to the sidelines, with the share of homes sold to them plunging to a 43-year low, according to a new report. The 2024 profile of home buyers and sellers from the National Association of Realtors looked at transactions from July of 23 to July of 24. And the share of first-time home buyers during that period fell to just 24% of all buyers. The National Association of Realtors said that's down from 32% a year before. The figure is now at the lowest point since NAR began collecting the data in 1981. So even that 43-year low, guys, that's only because the data only goes back 43 years. For all we know, for first-time home buyers, this is the worst housing market ever. Prior to the 2008 subprime mortgage crisis, the share of first-time buyers was historically around 40%. Now it's at 24%. So you can see it right there, guys. All of this Keynesian economics, this Zerpenberg, the easy money. Who is really paying the price for that? Younger people are, the first-time home buyers. The American dream of owning their own home has been stolen from them by central bankers and Wall Street and other generations that have seen their net worth, their wealth explode higher. And now the housing market is just frozen in place. Prices won't go down. Why? Because the government won't let them go down. If the government would just get its fingers off the scale, home prices would fall, but they won't let it happen. And they won't tell you that they're not letting it happen. They'll fill your head with stupid political talking points about how, oh, my economy is going to be so good, you're going to own the best home, and I'm going to give you money to buy a house. Don't worry. Oh, yeah, pumping more free money into the housing market. That'll speed us on our way to success. This is easy money, has destroyed the dream of home ownership for an entire generation, probably two entire generations. The only way this is going to fix is if we let home prices fall, and they will fall if we just let them, but we won't let them. And guys, I just want to say that brings me down to my last point that I want to bring up before we go through the super chats, guys. Hold your nose and pick one. All right, we're finally here. It's election day. God help us. It's here. I don't know, guys. These are the choices we have. So pick one, and may the odds be ever in your favor. Now, let me just say this. I hope we have a winner tomorrow. I Please, God, let us have a winner tomorrow. I don't want to live in a world where we don't have a winner tomorrow. Even if the winner isn't my preferred choice, I just want a winner. And the one silver lining, let me just say, guys, no matter who wins, everybody loses, all right? If Trump wins, Trump is going to be in office. Kamala loses, but then Trump is in office when the economy goes to hell in a handbasket, and so Trump gets blamed. If Kamala wins, well, then Trump loses, but then Kamala loses because Kamala is in office and she gets blamed when everything goes to shit on her watch, all right? So no matter who wins, both parties lose. No matter who wins, we lose. So hold your nose, go into the booth, pick one, and be ready for what's coming. Because honestly, we all lose this election, and it's our fault, all right? It is our fault. Enough of us have not made Washington getting their financial house in order an issue that neither candidate gives a shit about it. They're all just like free stuff. No taxes on tips, no taxes on firefighters, no taxes on this, no taxes on commission, no taxes on whatever. And then the other person's like, free money for childcare, free money to buy a house, free money for college. You get a pony, you get a pony, all right? There was a quote from Sven Heinrich today. Fiscal dominance is now turning into fiscal absurdity. And that is a reflection on us. We as a people still act like money grows on trees. It doesn't. We are the financial equivalents of idiot children and drunken sailors as a society. So this ridiculous exercise is a reflection on us. We have not made getting the financial house in order a priority for DC. And so they don't have to pay attention to it. So hold your nose, pick one, and do better next time. Maybe join a party and vote in a primary so we have better choices next time. I don't know, guys. I'm just throwing it out. I don't have all the answers. All I know is what we're doing right now. It's not working, and it's not going to get better. We are yet to hit rock bottom when it comes to politics in this country, and that is a pretty profound statement right there. Thank you so much, Mish, the mod, for everything you do for the channel, brother. Appreciate all your help with the research as well as your services as a moderator. And Mish is saying, get out and go vote. Yes, sir. Go vote, guys. Pick one. It's your license to bitch. Renew your license to bitch. I share that sentiment. I plan to do so just as soon as this stream is over. Brojo's 420 Cafe, thank you for supporting the channel. He says, what if BRICS had 90% of the gold? Probably for U.S. BRICS doesn't have 90% of the gold, but if they did, they still would not peg their currency to gold. Even if they had it all, they still wouldn't do that because when you peg your currency to gold, you give away your ability to loot the public via inflation. And people like Xi Jinping and people like Vladimir Putin are not the kind of people who willingly give away their power. They just aren't. It's not in their DNA to do that. And that's why I think this whole BRICS gold-backed currency thing is really misguided. BRICS will probably eventually come out with some kind of a common currency or some medium of exchange for their own national currencies that functions like a common currency, but it won't be backed by gold when it comes out. I can almost guarantee that because these people just won't give up their power. Thank you very much, Brojo, for the super chat, the support of the channel. The Pasta Man, what's going on, Nashville? He says, Buddy printed new menus for his restaurant, up 30%. Well, that ought to look great on our CPI math for next month. 30%. At the very least, your buddy can still print a menu. There was times during the hyperinflation in the 1920s in Weimar Germany, if you've ever read some of these stories, where restaurants didn't even print menus because by the time the ink dried on the menu, the prices were too low because the currency had inflated just since the morning. So at the very least, your buddy can still print menus. And, it's worth the money to print a menu. And by the time the menu arrives, he won't have to raise prices again. Even that 30% price hike, that's big. That's really big. And I'm curious how sales do at your buddy's restaurant following this. But guys, don't think it can't get worse. It has been worse previously in other parts of the world, in major industrialized economies. We can get to the point where restaurants just give up on putting prices on menus. And they'll be like, I'll tell you what, by the time you're done eating, I'll tell you what's going to cost you because we have no idea how much the government is going to debase the currency in the time it takes you to finish a freaking BLT. Yes, we've been there before. And the way we're going, we are going to be there again. Thank you for that anecdata, Pasta Man, as well as supporting the channel. But wait, Pasta Man is back again. He says all interns, maybe all items on the menu, that is minus, 3%. Okay, my bad. All right, 3%. Not as bad. 3% is much better than 30%. Am I getting that right? All interns on the menu. Yeah, could I have the roasted intern, please, or the fried intern? And cannibalism. It's not that bad yet. We're not eating the interns yet. And Bill Clinton's over there getting excited. Calm down, Bill. Jeez, it's a family show. All right, so 3%, a little more reasonable of a price increase, Pasta Man, but still, new menus, new prices, inflation is still there. Thank you for the super chat once again, sir. And thank you to Charles G, who says, go vote US. I agree. Go vote. Renew your license to bitch. Thank you, Charles G. Appreciate the super chat, sir. Nashville, you're back again. That's 3 times. Okay, so first it was 30, then it was 3, now it's 30 again. Will there be a fourth? What's the over-under on a fourth from Pasta Man? Okay, all items went up 30%. So it is a big price increase. All right. Thank you, Pasta Man. Covering up, taking a lot of the airwaves today, Pasta Man. Appreciate the super chat, everything you do for the channel. Also appreciate all the insights you give me in the Twitter messages and all the stuff you've been sending me lately. It really does help the channel. That same goes to all you guys who send me messages. I don't always reply because I get literally hundreds of messages a day, thousands if you count all the other notifications that I'm getting. And I could not possibly reply to all of them. If it was the only thing I ever did, I still couldn't get to all of them. But thank you guys. I do appreciate that. And I do read pretty much all of it. And Charles G, thank you, sir, for the super chat. He says, so apparently with PepsiCo, they have been getting rid of union represented plants over safety clauses. Chicago one just got a re-up contract before closure. They're using the economy to rid of unions. This is a new one. Are they shutting down the plants over safety violations and then opening new plants with non-union labor? So they're using the safety violations as cover. Is that kind of what they're doing there, Charles? There's a couple of mentions of Pepsi in the comments in the last couple of days in these bottling plants. I know I haven't done a very good job of reporting on the Pepsi stories because there's just been so much going on in automotive and Boeing and the jobs reports and big tech earnings that, you got to pick and choose your battles. But all right, I'm going to look into Pepsi a little closer there because now talking about safety clauses and union busting, it's possible that Pepsi they're overproducing. Sugary drink sales are way down, whether because of Ozempic or just because the stuff is so bad for you. So I'm not terribly surprised to see Pepsi closing plants, but if they're just reopening new ones in non-union areas, well, that's a different story. Thank you, Charles. I appreciate that, sir. I will take a look into that story. Madison Hypes, thank you, says deep dive, TGI Fridays on DNN. Great reporting. Thank you, Madison. We did talk about TGI Fridays on DNN over the weekend. And we talked about that one yesterday, by the way. They looted the company. The private equity firm came in. It was one of their biggest well, no, not one of their biggest. It was the biggest bond they had ever issued. They packaged the whole company into a whole business securitization, borrowed money against their business, took that borrowed money, gave themselves a whole bunch of it in the form of dividends. That's exactly what Steward Healthcare did to hospitals all around the world. And then they ran the business into the ground, and now their bondholders have seized the whole company, and they're filing for bankruptcy. Private equity, I don't know how to stop them. I'm not in favor of government bans like we were talking about yesterday, but these guys are locusts. They're vultures. They're Henry Hill and the mobsters going into business with people, walking in the front door, carrying everything out the back while they rob the place. Once you go into business with these private equity vultures, it's just a matter of time. They will bleed you dry. Thank you very much, Madison. I appreciate the good vibes. And Grandpa, thank you for Peanut and Fred, the squirrel and the raccoon. Yes. Imagine a world. Picture, if you will, all right? We're going to tinfoil. Picture a world where the government does not have the resources to send a SWAT team to somebody's house to seize a raccoon and a squirrel. Imagine a world where that is viewed as a waste of time. That's a world I want to live in, where they're like, all right, this guy, he's a weirdo, and he's got a squirrel and a raccoon for pets. All right, it's probably not the wisest thing. They're wild animals. They don't make the best pets. But send the SWAT team and then just to euthanize them? I don't know. How about put them in a box and drive them out to the forest and let them go? Oh, what a crazy idea. Let him go in the woods. Why? Oh, well, no, the lawyers and the environmental impact study and the water runoff drainage. And then by the time we spent $5 million studying the environmental impact of letting a squirrel go in the woods, then they just decide, no, we're going to euthanize it. I can't stand the government. I really can't stand the government. But hey, hold your nose and go pick one because it's the government we have. Thank you, Grandpa. I appreciate the super chat support of the channel. A moment of silence for Peanut and Fred. And thank you, Steve Whitus, who says, happy voting day, America. All the best from your friends in Canada. Thank you, Steve. Look the other way. I apologize in advance for what comes out of the airwaves from my country for the next couple of days. But you know what? Hey, you guys got Trudeau, so it's like it's hold my beer, eh? That's kind of moment. So yeah, they all suck, don't they? Thank you very much, Steve Whitus. Appreciate the super chat. M&J, thank you for everything you do for the channel. Says likes and subs matter. Please hit both if you know these guys work hard for you. Well, yes, we do. Thank you very much. But so does M&J. She works hard keeping things neat and tidy in the channel. That is the channel boss talking right there, guys. So M&J, thank you very much for everything you do for the channel as a Blue Wrench. And also thank you for supporting the channel. And Charles G says, I'd rather have reduced taxes than get free money from the government. Yes, reduce taxes. But here's the thing, free money from the government. Half the country doesn't pay any taxes. So when the government says we're going to lower your taxes, half the country doesn't care because they don't pay anything. Now, when the government says we're going to give you free money, the half the country that doesn't pay anything says, wham, bam, thank you, ma'am. Yes, absolutely. I'll take it. And then the people who are getting taxed, they say, oh, well, by the way, we're going to tax you $100, but don't worry, we're going to give you 50 of it back. You're welcome. Oh, and then your cost of living is going to go up. So it's going to cost you another $250, $300 a year because we had to give our buddies and our lobbyists favors that we owe them for their campaign donations. The government never gives anyone anything. They don't. They only take and redistribute. They do not give anything. All right. The government is where money goes to die. Remember that the next time they're offering stimmies, when they offer you stimmies, they're robbing you blind. I was screaming that in 2020, but I didn't have a platform back then, so didn't help. But thank you very much, Charles. Appreciate the super chat. Man, there's a lot of you guys today. Zeeble Fritz, thank you so much. He says, I just wanted to join the super chat party. Welcome to the party, Zeeble Fritz. Come on in. Bring a friend. I appreciate it, sir. Thank you, guys. I really appreciate the generosity. Thanks, Z, for the super chat, the support of the channel. We ran a little long today, guys, but hold your nose. Go vote. That is the message. Pick one, renew your license to bitch, and I don't know. Everybody just take a deep breath, and we'll see what we're dealing with tomorrow, all right? Thank you very much, everybody, for the super chats. Thank you to my channel members for supporting the channel on YouTube and Patreon. Links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.